You're about to listen to a conversation that I had with an analyst that I've become friends with. Luckily for me, he watches the British HODL channel, so it was easy to reach out and try and set up this conversation. This conversation is about MicroStrategy. It is about what MicroStrategy is becoming. Now, as all of you know, I started buying MicroStrategy on August 12th of 2020, the day after they announced a treasury announcement, a conversion to Bitcoin. But when the ETFs came out, my thinking, my traditional minded thinking was telling me that up until now, MSTR has been a Bitcoin ETF. So therefore, if the real ETF comes out, well, then there's going to be a value question on MSTR. And therefore, I decided to trim down my position, take some profits, etc., etc. And I was right for about 3 weeks. Then something really changed. Then the objective and the real product that MSTR is becoming and the client that MSTR is attracting started to become clear to me, right? And then I've then since decided to up my position allocation for a long-term hold. And then there was a lot of conversations about whether the premium to NAV matters. Well, in this conversation, I wanted to let you hear it from Ben because it's a different perspective, it's a different style, it's a different energy to me. And I've learned a lot from Ben's analysis of MSTR on Twitter. So I wanted to have this conversation because we're going to go through every single thing that you need to understand about MSTR. If you're sitting there going, why is MSTR going up? This is going to answer it for you. If you're sitting there going, how come I'm happy or people are happy to pay $190,000 for Bitcoin exposure when they can buy it for $70,000 from IBIT, this is going to answer it for you. If you're sitting there going, do I need to get an MSTR allocation in my portfolio? This conversation is going to clarify every single thing that you need to know in order to make a decision about whether to allocate to MSTR or not, whether you need an exposure or not. You know which side of the debate I'm on, and it's because I've understood everything that we're going to have in this conversation. Now, I'm not a podcaster, I'm not an interviewer, so I tried my best to put this together, so I hope you forgive me and understand that I'm not a professional podcaster on this, but I thought that this conversation was extremely important for you to have, for you to hear and for you to have, so that you can make the decision on whether you need an MSTR allocation, clear the fog around what MSTR is, clear the fog around what the future of MSTR is, clear the fog around whether or not the premium to NAV matters, clear the fog around whether they can continue to expand their Bitcoin buying operations or not. Clear the fog on it all so that you can sit there and say, do I need to get an allocation or not? That is what this conversation is about, and let's get to Ben right now. Ben, tell us, what is MSTR doing?
So MSTR is breaking a lot of the models that traditional finance has followed for decades now, which is one of the better stories I think people are finding enjoyable to follow in the markets because it's something that they haven't really seen. And I put out a post the other day that a lot of people really seem to appreciate the analogy, but I look at MicroStrategy as essentially acting as a loading dock for institutional capital to make its way to Bitcoin. But the important part about that is they're not just capturing any capital and bringing it to Bitcoin. They're bringing capital that otherwise would be prevented from even making its way into Bitcoin. And they're doing that by taking it from these other funds that have charters that tie them into one specific type of investing. So the ones that we look at often with MicroStrategy is the convertible arbitrage traders who have to buy convertible debt. And the underappreciated part of what MicroStrategy is doing here is they're going out and they're capturing all that capital, and there's billions and billions of dollars, maybe trillions of dollars in just the arbitrage market that would never be able to make its way into the spot Bitcoin market any other way. They can't buy the ETFs, they can't buy anything else. And so I view MicroStrategy as an evolution of a business model here. And they've really changed the way that they're looking at product market fit. And they're getting away from the traditional way that we think about products as consumers, where they have a BI platform or their software platform that they sell to companies to do analytics on all their data. And they're moving and saying, where do we find the biggest customers with the deepest pools of capital? And how do we find the right product for them that also ties into Bitcoin, which is our core strategy? And so I think it's really a rather fascinating development for them because they're looking at the inner workings and the incentive structures for all these different pools of capital out there in the market, and then they're tailor making their new products to those customers, which makes it very easy for them to say yes to get into the game. And whether they intend for their capital to end up in Bitcoin or they just want the volatility of the bonds, they're coming in the door now. And it's speeding up that adoption and that liquidity, both in MicroStrategy itself, but also in the spot Bitcoin market. They're bringing huge liquidity to the spot Bitcoin market, which I'm sure we'll talk about more here in a little bit, but it's been a fascinating development, one that's very, very interesting to follow.
So what are the different methods that MSTR could use to actually acquire the Bitcoin? Hey, I'm going to get back to that conversation in 2 seconds. What I want to say is please subscribe and follow, because the faster you do that, the harder you help me spank the algorithm, the faster the algorithms will put Bitcoin content out in front of other people. My mission is to get as many people to one Bitcoin urgently as possible. So please subscribe and follow. Now, let's get back to the conversation.
Sure. And so they're really looking at two primary methods at the moment. I'll say three because I'll include any free cash flow that they have left over, but they're starting to utilize that more. So the first one and the most basic is they can use the key free cash flow from the business. If they're not using it all to service debt, they could use that excess cash flow to buy into the Bitcoin. But the two primary levers that they're using for this strategy is selling their own equity. So people online will hear us often refer to ATMs or at the market offerings, which is basically just MicroStrategy selling their own shares into the market, the same way you or I would in a Fidelity account or any other brokerage account. They're selling it out into the market. They're pulling in that capital from these investors that want their equity, and then they're deploying that into Bitcoin. And the beauty in that one is, one, yes, they only get to sell the shares at whatever the market price is, right? That's an important part of that. There's no premium on top of the share price associated with that. But every Bitcoin that they buy using that capital shifts straight to the balance sheet. It's totally unencumbered. I mean, all the bonds are unsecured, so it's technically unencumbered as well. But these don't carry any additional debt to the balance sheet that the other lever would be, which is the convertible bonds. And I don't think they're going to stop at convertible bonds, and Saylor's said as much here, but right now where there's a huge appetite is in the convertible bond market. And I think that these funds that are out there, right, these white boxes, all these other funds out there that need these convertible debt products, they've been kind of starved for volatility, right? They have to invest in whoever's offering convertible bonds.
Why have they been starved for volatility? Let's talk about that.
Yeah, so, and I'm saying starved for volatility in terms of the types of returns that a manufactured or engineered leverage product like MicroStrategy can offer to them. So when you get a lot of other companies offering convertible debt, that convertible debt might only come with that equity option tied to it that might be a 30 vol asset or a 20 vol asset, which basically means it's not going to move a ton, right? And these guys rely on these hedging capabilities, these delta hedging strategies, to capture movements from the underlying equity so that they can capture these mispricings between the bond and the equity. And so as that price runs up, they'll start putting on a hedge, which just means taking a short position in the equity. And then as the price of the equity comes down, because volatility goes both directions, they can now capture that when they take their hedge off, right? And it's most basic. It's like everyone understands. It's a start to sell when the price is getting high and then start buying it back when the price goes back down. But for these convertible bond arbitrage guys, this enhanced volatility, right, this drastic movements in the stock gives them just a ton of opportunities to generate those returns in an ongoing manner. And so they love this type of movement that they get with a MicroStrategy stock. And you're starting to see it now with some of these bonds that are reaching well before maturity. They're hitting these provisions for early conversion, which would typically you wouldn't expect to see until much later in the term, because you wouldn't expect the stock to move as much as a MicroStrategy moves. So that gives them flexibility in the event that they get trapped fully hedged, right? Say that they're fully hedged, they've hedged out the entire equity position, so they're no longer benefiting from that. If they wanted to, with an early conversion, they can now go and free up their capital, right? They can convert, they can get rid of the shares, they have an offsetting short position that they have to get rid of. So it's not like what everyone's saying where they're going to come and they're going to dump billions of dollars worth of shares into the market. Technically, yes, but in practice, there's a short position that they also have to close. So it's like this simultaneous sell the shares they just got from conversion, buy the shares to close out the short position. So it's far closer to market neutral in that aspect. But it gives them flexibility to recapture that capital and redeploy it. And I think for a lot of these guys, if they could get back into another round of MicroStrategy convertible bonds, I think that they would jump at that opportunity because they essentially just get to reset their delta position and start their hedging from a new level.
How big is that convertible bond market right now? Do you know?
I don't know the exact numbers on it. I know that the total bond market is somewhere around 300 trillion. Yeah. Now, that's a lot of the fixed income products and all that people traditionally think of when they're looking at the 60/40s. But I got to imagine it's a trillion plus market just for the convertible bond piece of this.
Yeah, that's the thing that I think most average investors that are going to be watching this don't understand. MicroStrategy is orchestrating itself to be a product to that audience. And you know, again, they've announced this $21 billion issue and $21 billion of ATM, which we'll get to in a second. But first, tell everyone what got you interested in MSTR, when you got interested in MSTR, what you were doing before you found MSTR, and what set the light bulb off. And
yeah,
Bitcoin.
Absolutely. So I've been investing for a very long time. I had the benefit of my dad. He's a financial advisor. So I kind of grew up watching that world. It was actually what I went to college intending to do. But when I came out of college, it was right after the financial crisis. So not the best time to jump into the market to be a financial advisor. But I'd always been very interested in investing. And I was always looking at emerging trends because the old ways of investing were never overly exciting to me. And the world's been changing so quickly that I think following the shifts in the market and the products that are coming out to the market to try to find the next company that's doing the new thing that's going to change people's lives or change the way the market views them has always been an interesting segment to follow. And so Bitcoin was something I found really early. And we screwed it up badly, like a lot of people here. But I found it in 2012 was the first time. I made a post a long time ago talking about the first time that I bought a Bitcoin, and it was 2012, and the price was $264 a Bitcoin. And I sat in a room with my dad, and we joked and laughed about how we should just buy 1,000 and see what happens. And, you know, he couldn't because there's regulations there, and we both were just watching this new thing that no one had a grasp on. So obviously I didn't do that, but I did stick with Bitcoin for a very long time, and I kind of re-entered in 2017. And I went through a lot of the phases that most people go through where you get distracted. You've found the thing, but you get distracted by all the shiny new objects entering the market. So I went down my altcoin path for a while.
Oh, God.
And both made a bunch of money and lost a bunch of money all in 1 week. And I remember because I was
what was your favorite shitcoin and the one that cost you the most, so the one you hate the most?
Omise Go was the one that got me. And there was no analytics behind why I was doing this, right? It was like everybody else, and it's just the new shiny toy, and you can't help yourself but throw money into it and dream of the 1000x that comes with it. But when it happened to me, I was on a ski trip, and everything went ballistic. But this was before you had it on your phone and could do anything about it. So I didn't even bring my computer with me. So I watched it go up hundreds of thousands of dollars while on the trip, and I'm excited. And then in the last 2 days, I watched it come all the way back down and then some. So it was just the most deflating thing of all time.
Of a ski trip, huh?
Oh my gosh, yeah. But it really did reset my focus because you look at that and you look at what's the value I'm actually getting out of any of these. Yeah. And when you go through that cycle and you go through the euphoria of it, you go through the crushing realization that you didn't capitalize on it, even though you might have been right speculatively. But it makes you look at all of them individually and try to understand what is the value proposition behind this project. Is there one? Yeah. And a lot of times the answer is no, there isn't. So I very quickly boomeranged right back to Bitcoin going, this is an asset that I can wrap my head around. I can see the value in a non-correlated store of value. And I can see that broadly in the world. It's a problem because inflation isn't new. It's just getting highlighted now because of how bad it's getting. And so that was an easy one to come back to. So then in 2020, when I saw MicroStrategy enter, that was a watershed moment for Bitcoin because everyone had been searching for who was going to be the first company or who was going to be the first country that got into this. And it's a bold move to be the first person to enter. And so my early investing strategy, before I really understood what MicroStrategy was doing, and at the time, I don't even think they knew yet what they were doing. But at first it was, I would support any companies that were supporting Bitcoin, right? Bitcoin was something I deeply believed in, and any company that was coming out into the market and supporting that in one way or another, I wanted to be a part of, right? So I would go buy the equity in those companies because I wanted to be in there. The other thing it does is it forces you to pay attention now. You're looking for the different models of how companies or how countries are going to deploy and utilize an asset like Bitcoin. And when you have skin in the game, that's really the only way you pay attention. And I think a lot of people are finding that with Bitcoin as well. If they don't own it or they don't own an amount that makes them pay attention, you don't really focus on its impact on the world. And I think that's something people need to spend more time thinking about. We think so small, right? We think in terms of 1 week, 2 weeks, what's our return today, right? But we're missing the big picture a lot of times when we're not looking at what are all the macro problems out there and how can Bitcoin fit in as a solution. And you don't want to always look at that solution as being total collapse of the world and the monetary system that backs the world. That's a bleak, bleak outcome. And I know a lot of times we
boomers that I talk about.
Yeah. We like to cheer for things like, well, if the US dollar hyperinflates, Bitcoin's going to be worth a ton. And you're not understanding what that means, right? You shouldn't root for that.
Well, and people, in my experience, don't actually understand how capital flows, because Bitcoin tomorrow could be worth $1 million and nothing has to change in the world, right? This is what I've been trying to shout about for a year by now.
And that's the beauty of it, is there's that other thread you can follow that says, realize how small Bitcoin is as an asset class in the global scheme of things, right? I mean, $1.4 trillion is nothing. I mean, I liked that Saylor put that in his presentation because it gives you scale for opportunity. Yeah. And you realize that they still missed it completely. And they think that Bitcoin's hitting this, peak where it's, maxed out, it's overextended. You're going, you're not paying attention. Like, you don't see how much money there is in the world. And when you do see that, you start to understand what the opportunity is here for Bitcoin and for a company like MicroStrategy.
Yeah, so just before we continue, tell people where they can follow you. Because I like doing this early because, most people have got goldfish attention spans. So it's better to tell them where to follow you right now rather than waiting until the end.
Absolutely, yeah. So the best place to follow me is going to be on X, and it's just Ben Werkman, Werkman with an E. That's really the only social media where I spend any time. And so when I do put out analysis and my thoughts on the topic, that's where it's going to be.
And I'll put the link in the description as well. So everyone pause this video right now and go follow Ben first, right? And then now that you've come back from following Ben, the next question that I really have for you is obviously, why has MSTR not got any other corporate competition? And could any arise and disrupt the trajectory of MSTR? Seeing as we're all sitting here like geniuses saying this is such a good idea, how come no one else has done this?
I think the problem that other companies struggle with is that the MicroStrategy model is an all-in model, right? You can't be distracted with other things. And so I think a lot of other companies look at this as a total shift in what's core to their identity as a company. They've always done whatever the product is that they offer. That's always been their identity to the markets. And I think having the understanding that you have to make a shift, whether it's to save your company from becoming obscure and forgotten because your growth prospects have disappeared, right? I think that's a tough mental transition for a lot of these leaders to have. And Saylor had to go through that entire cycle, right? He had the highest of highs followed by the lowest of lows in his own journey here. So he was ready for that pivot, knowing that to do something big, he had to change. I think a lot of these other ones are still scared. I don't think that they see the full clarity in terms of regulations that they want to see. I think that these ETFs coming out were a really good step. It legitimized Bitcoin as an asset class, and I think that'll start to bring some more attention to it. But I also think that the options coming in the ETFs is going to be the first step for a lot of these companies to dip their toe into Bitcoin, because I think right now what a lot of them are worried about is the whole custody conversation around how do you keep these things safe. if they go and invest in it and they're buying just the actual asset Bitcoin and self-custodying it or custodying it with a Fidelity, right now it's tough for them to hedge against that position if they want to protect the downside. But when those options launch, I think then you see that chance for a lot of these more traditional companies that might be sitting on large cash holdings in their treasury to go and dip their toe in the water, buy into the ETFs, actively hedge so they can take a lot of that downside risk away, but they can keep net long exposure to the asset class. And I think that'll start getting that interest back in. When it comes to the actual MicroStrategy play, I think we'll probably see an emergence over time of maybe 5 to 10 that will really double down and go in on this. I think it's going to be a tougher value proposition for them to accept until they see MicroStrategy so successful that they can just tail them into this, right? So if they keep seeing convertible debt be oversubscribed at MicroStrategy, they can't get enough of it out the door. There's a natural market gap that I think people will eventually pick up on, saying there's excess demand here. I can fill that demand, right? MicroStrategy can't throw these out every week. And if the pools of capital are really as big as we think, just in that market, just the convertible bond, not even talking fixed income or anything else, traditional fixed income, then I think that you will see a few leaders emerge that say, there's room in this. It's not crowded. Right now, a lot of the narrative is, how long can MicroStrategy do this? What happens when the demand dries up? And while they keep ramping up the scale of their operation, I think that will prove to the market that the demand is real here. And it's not dwindling, it's accelerating. People are going to start demanding these, and that opens it up.
The people that are saying that when the demand dries up, I don't think they understand how quickly capital can move to the convertible bond market, because these people are not looking for a Bitcoin investment, right? The average retail person that's looking at it is going, oh, that market must be interested in an X allocation to Bitcoin, and they're using MSTR for it. They're not looking for that. They're looking for an asset with that volatility. Regardless of what it is, it could literally be Shiba Inu coin underneath it, and as long as they've got that volatility, they're going to buy it. It doesn't matter, because the product that they want is the vol, not the underlying Bitcoin.
Exactly. And that's the part that people are missing with MicroStrategy, is they're having a hard time separating market value of Bitcoin, right? Bitcoin holding times spot price, from the value that these giant pools of capital place on the volatility of the equity. And so that's where people are struggling to wrap their heads around. Why can MicroStrategy trade at these premiums forever right now, right? I mean, yes, they were below one for a while.
Yeah, funnily enough, that was going to be my next question. So even though I placed my first MicroStrategy trade on August 12th, 2020, which was the day after they announced that they're moving the treasury, because I found it really intriguing that they did a buyback offer for all their shareholders that didn't agree with their strategy. That's what gave me the confidence to go, okay, I'm going to get involved in this. But what hampered my confidence and my analysis from a rational perspective was, well, if people are using MicroStrategy as an ETF, a de facto ETF, once the ETFs come out, MicroStrategy is going to lose its shine. I completely didn't value the convertible bond market and it looking for a product in and of itself. So the question really is does the premium to NAV even matter, and how should an investor consider paying, right now $190,000 for Bitcoin that you can buy through IBIT for $70,000?
So I don't think that the multiple to NAV is something that ultimately is going to matter, right? I do think over time what we might see is kind of a stabilization during sideways periods that establishes what people will start to consider as a floor on the multiple to NAV, or a steady state on the multiple to NAV. And then that NAV is going to expand and contract with market sentiment, with macro condition changes, and with demand, right, from all of these convertible arbitrageurs or other products that they're putting out there. So I think that right now the value is in the volatility, not the price. And when you have buyers that aren't focused on the price of the equity, that's a different kind of buyer, right? They just want it to move. They don't care where the price is. And so, go ahead.
No, that was really the thing that drew me to you, because even though I was in MicroStrategy from August 2020, when I read your analysis, I was like, oh, I've misunderstood the product here. So I scaled down my allocation as soon as the ETFs came out, got it right in the first 3 weeks, got it completely wrong in the next, few months. But I started scaling back up my allocation because, MicroStrategy is not the product that retail guys like me were looking at. It's not built for me. It's built for an institutional market, which is why I think, some form of allocation, if you're smart enough, if you understand MicroStrategy overall, just as a leveraged instrument for and what the product is for and who it's for, because it's not for us. It's for debt markets. I think there's a viable allocation there. Now, the craziest part about it is their recent announcement, right, on the earnings call. I saw you tweeting about the earnings call. It was a crazy earnings call to listen to. But
It was.
So they've got like a $55 billion valuation right now, and they've just announced a plan to raise $42 billion in ATM and debt. How the fuck is this going to work?
I think a lot of people started asking that question the next day when it was essentially trading flat, right? How do you announce 100% dilution and remain flat in the markets?
Right.
And it's a shift in thinking.
For sure.
Absolutely. And it's a shift in thinking. And people need to understand on this is that their ATMs are fundamentally different to what a lot of other organizations are doing, right? Most public companies have ATMs open all the time. People are just unaware, right? Because it's not at the same scale. The difference is a lot of these other organizations are using that capital to plug operational inefficiencies, right? You're paying traditional payroll costs. Maybe you're using it for acquisitions, which, Saylor highlighted, mostly lose their value, right? You can't integrate that company into your core business well. You can't realize the benefits you thought you were going to get. So now you've got to use that equity you're raising in the markets to plug that gap as well. So those aren't value accretive uses of that capital. The difference with a company like MicroStrategy and why they can say we're going to open a $21 billion ATM and the market cheers for it is because this is a shift in mindset. With other companies, you're looking for growth in things like revenue and earnings per share. That's what people really want to see growing. And the minute you miss on those metrics, it craters your valuation in the market because they think you're out of steam for growth. The difference here is their metric doesn't have anything to do with earnings per share. What they're tracking is how much they're acquiring a hard asset that sits on the balance sheet indefinitely. That value, as soon as they capture it, moves to the balance sheet, and that asset stays there. It's not getting recycled through the organization like the cash earnings are from other companies. So it's a different model to try to think through and to try to figure out how do you value that type of a company. And I think Saylor did a pretty good job of explaining the rationale for a multiple on their holdings because of the growth to that asset. That asset doesn't ever, or that value of those assets doesn't ever leave your shares, right? Mm-hmm. It's underpinning your shares. That's why Bitcoin per share is tracked so heavily now, is because that is a value capture metric, right? That value's on the balance sheet. You can go look at it anytime they put out new earnings. And that is going to change the way that people look at the value of that type of an organization. Because it's not trading at the whims of market sentiment on, getting your products shipped to you from China and the margins that you have to pay on there, or tariffs coming in on new products and what that's going to do to your revenues and your customer demand. Can people even afford your products anymore? He's offering products that Wall Street has to have, right. And he's capturing that capital and he's scooping up a hard asset and putting it on the balance sheet that underpins all the shares. And it's not eroding any value from the shares when he does that. And I think that's a tough mental barrier for people to get through to really grasp what that means.
Because they're not trained to, right? They're not institutional capital allocators. People are looking at it going, I buy a house, I rent a house, I get a cash flow. But they don't realize that, one of the things I had to learn in 2008 was that when I was in the real estate market, I wasn't in the real estate market. I was in the credit market, right? The real estate was just a proxy to the credit. And so people find that hard to understand. So what is this MSTR doing this, right? What does it mean for traditional debt markets? And does it mean that they can expand those debt markets? Does it mean that there's more capital coming into those debt markets? Like, how does this change the game for those institutional thinkers and allocators?
Yeah, so I think the first 2025 is going to be the best test for this, right? They're coming out right now. They've got in total 4.26 billion in convertible bonds out there today. They're issuing more than that now, and they've done that since they implemented the strategy, right? Now they're going and they're putting 5 billion out in a single year. And so I think what's really going to wake the markets up is if all of those get oversubscribed as well, that's going to show that the demand in this market is anywhere but tapped out, right? That's going to show that this institutional capital is sitting on the sidelines. They are hungry for these products. And my hunch is his phone's been ringing off the hook since he made this announcement, right? With people saying, you've got to get a lot of capital out the door. We're waiting. How quick can you get it to us? And it'll be interesting to me to see how fast he actually implements this schedule. Does he stick to the 5 and 5, 7 and 7, 9 and 9? Or does he pull some of that forward because the demand's there and he wants the Bitcoin early? That's yet to be seen. He doesn't tend to be an underachiever in accumulating Bitcoin.
I think he tries to go as hard as possible, as fast as possible.
Exactly. And so this is going to really expand that opportunity into the market and start to give people a concept for size. 5 billion sounds like a lot to a retail investor.
But it's nothing.
It doesn't sound like a lot to institutional capital allocators, right? That's a normal day at the office there. And when you realize how many funds...
How much have they printed to send over to the Ukraine? It's like $70 billion.
Exactly. We have missing capital and rounding errors in those numbers that are way more than this, right? So it's hard for people to fathom the depth of that market, but we're going to find out here pretty quick.
So when you've got, him promising you, basically, I'm going to dilute the shares to basically 100%, and then the share price doesn't move. This was one of the things that I was hooked up on. It was like, well, the premium to NAV matters if you are looking for a good entry point, because you might as well leave your money in Bitcoin, and then when the premium to NAV shrinks enough, then you can put it into MSTR. That seems to not be efficient if you are looking at a long-term position. If you're looking at a short-term trading position, maybe. But a long-term position, it's like, how do you take the risk of that? So what are some of the risks of these ATM sales for the average investor who's considering to make an investment, and what do people need to watch out for?
Yeah, I think with these ATM sales, particularly at the scale that they're about to come, is that can dampen the upside moves, right? $5 billion is not a small amount for them to get out the door, right? That's 19.8 million per trading day, which is a lot of money and a lot of shares to trade hands. And so they're going to have to drip that money out into the market. This isn't going to be one of those things where they can go and deploy the whole amount during a mania squeeze, right? If we get a gamma squeeze, then they can come deploy it. That's too much capital for that. So while they'll certainly be opportunistic with it, they're going to drip it out there. So it could mute price performance over a period of time, and you might just see more, I'll call it more steady price movements than the wild swings we've been seeing. The interesting use case is the last couple of months, because what came out in the earnings was that they weren't using the ATM, right? They didn't deploy that last $889 million they have available on the first ATM. And what did the price do while they weren't dripping any of those shares into the market? It ran, right?
Yep.
So you have to acknowledge that it has an impact on price. It certainly does. The difference with these is I think everyone looks at it as dilutive, but it depends on what your mindset is on dilution, right? It's not diluting value. That's the difference here, right? Yes, it's diluting your percentage of the total equity holding. That's one thing. But it's not diluting the value that underpins your shares, which is why you should be in a company like MicroStrategy. If you don't believe in the premise of Bitcoin, MicroStrategy is not for you. Yep. If you believe in the premise of Bitcoin, you understand what they're doing here. And the thing that I want people who are Bitcoin maxis to focus on is the benefit this is bringing to the Bitcoin market. So we talk about the liquidity around their shares a lot, right? They're volatile. It's a deep market that can trade the MicroStrategy equity. But the part that we don't talk about as much is when he comes out and says, I'm deploying $10 billion and I'm deploying $5 billion of it via ATM. What that says to me is that he's dripping liquidity into the spot Bitcoin market. So he's growing the liquidity profile of Bitcoin itself. And that alone will attract different types of capital to the spot Bitcoin market. So he's doing a service to both the equity holders of MicroStrategy. He's also doing a massive service to the spot Bitcoin holders because he's providing that liquidity. Now there's a bid in the market, and a big one, right? At 19.8 million a day in 2025, if you just look at the new Bitcoin, the 450 Bitcoin that are coming out, you could essentially look at that and go, on market trading days, that essentially puts a floor to those of 44,000 a Bitcoin in 2025. Yep. That ignores the ETFs, that ignores the huge crowds of DCA buyers, it ignores all of that. And so that liquidity he's bringing is very undervalued by the Bitcoin
and that's
community
for 3
in
years.
my mind.
That's
well, in the first year is the smallest year, right? If you go to 2027, he's got $9 billion. That's $35.7 million a day.
You're looking at $80,000 floor from one
Exactly.
buyer.
Exactly. Yeah. And now you add in the doubling because of the converts. Now those will come in bursts, right? Yeah. But it's liquidity nonetheless. And that liquidity goes to the shares.
Yeah. Doesn't include nation states, doesn't include ETF buyers, doesn't include retail buyers, doesn't include anything.
Exactly.
Right? So the thing that I've said is MSTR could actually blunt this bear market, this upcoming bear market with this purchasing that's going on. What do you think of that?
I think that's kind of what he's signaling to the market, is he's going, everyone else is looking to set up their trade to exit in late Q3, mid Q4 of 2025, right? A lot of people subscribe to the 4-year cycle. And the 4-year cycle has been so consistent that I understand that thought process.
It's been consistent for what? Four data points. So
exactly. We have to realize how short our time frame is here, right? And we didn't have this level of institutional capital coming in. And it's not even because they want to put it in. It's because MicroStrategy is selling them a product that trickles into the market. So when he starts saying, in 2025, I'm putting 5. In 2026, I'm going to increase that by 40%, and I'm going to put $7 billion in. The next year, I'm going to increase it another 28%. Now I'm going to put $9 billion into the markets. He's showing that there's going to be a consistent bid for Bitcoin for years to come. And I think that signals broader to the market that we might see, if we see a pullback, and I think we will because people have conditioned themselves for it. So you will get that selling by people that don't want to take the risk that it does happen and they held on, right? But he's signaling that there's going to be a bid out there in the market. And I think that's a really powerful thing for retail traders and institutional traders to digest.
Yeah, even if you get a pullback, if it's blunted from 80% down to 60%, that's a huge deal from an institutional perspective. So, okay, cool. Now, in terms of one of the things I like about your analysis is that it's actually based on cash flows rather than just moon math. So, one of the things that I resonated with was looking at their cash flow sheet and going, they've got a bunch of debt that they have to service here. How can they take all this debt on? And will they ever run into an issue where they won't be able to service the debt that they've taken on, and then they'll be forced to sell some Bitcoin?
Yeah, so that's a fear that a lot of people have started to have. And I even focused on that significantly early on, right? I do a lot of analysis showing, right now I was trying to show how easily at current levels of cash flow from the operations of the business, they could cover these convertible bonds that they have, because they were throwing off about $65 million in cash flow available to service debt. And right now with the convertible debt, they're using about 34 of that, right? So they've still had plenty of cash flow. But when you look at the scale of what they're ramping up, we're going to be looking for two things, right? The first one is, what are the coupons going to look like? And that's going to be a function of what does the demand in this market look like? If these buyers are really trying to get in the door, there's a precedence out there already where MicroStrategy has already done a zero coupon bond offering, which has no cash flow impact. And if they get back to that, then they've got their free cash flow still. They haven't even had to tap it, right? These guys just want the volatility.
Let's just pause on that for a second, because I know that's where retail investors are going to get confused. Why would anyone want to lend MicroStrategy money at zero? Explain why they want to do that, and the fact that the MSTR product is what they're looking for, not the underlying Bitcoin. Explain why anyone would want to lend the money at zero.
Yeah, so it goes to the incentives of how these funds make their money, right? So they're not making their money from the 0.625% coupon on these bonds, right? Yes, that's a nice little bonus. It's a little bit of cash flow that they get from the fixed income side of these, but that's not where they're making their money. What they like is the call option that comes with it. When you look at these convertible bonds, it's kind of the best way to get that Bitcoin exposure for a lot of these funds, because it comes with essentially a floor if you believe that Bitcoin is money good at maturity. right? You've got a par value to your bonds where your worst case there, if you believe Bitcoin's still money good in the year it matures, is you get your money back, right? That's your downside. But along that road, you get to utilize this delta hedging strategy and capture the movements that volatility affords you on the bonds to generate returns constantly throughout that period. And the more volatile it is, the more chances you get to generate those returns on those big moves. So they just want these bonds because they move. They're not really looking for these bonds, and this is my opinion, because of the coupon payments that they're getting from them. That's a very secondary thing. And if there's competition to get the bonds, a lot of them would likely be willing to give up 0.625% interest a year for something that's 105 vol, right? It's going to move wildly.
Exactly. This is the key thing that I wanted to have this conversation with you about, because the main thing that, in my opinion, that my audience and everyone in retail, even people that are in, maybe tens or 50s or hundreds of Bitcoin, are not understanding is that MicroStrategy fundamentally is not a Bitcoin ETF. It is a volatility asset that convertible debt markets can buy, which is why you have to look at it completely differently. So if you had to summarize what MSTR is evolving into as a financial product itself and who the customer of the product is, and you had to summarize that simply, how would you say it?
I think MicroStrategy is evolving into an Amazon for capital markets. And I don't mean Amazon, in terms of AWS. I mean Amazon in terms of how you can go onto Amazon.com and buy any product that you want. And I think they're evolving with their scale to provide all the types of products that meet the needs of all these different institutional investors. And so they're becoming a one-stop shop for Wall Street and Wall Street's capital, which is deep. They've shifted their model away from let's sell subscriptions in small amounts to companies to let's go capture $1 billion from a couple of funds. It's a much more efficient use of driving that type of growth.
Yeah, it's a fantastic pivot that retail is just not understanding what's going on here. Now, how do you think the FASB rule changes are going to impact the scalability of MSTR's Bitcoin accumulation plan?
So that one's yet to be determined. There's a lot of questions out there around what the tax ramifications are going to be when they adopt that. And it seems like by waiting until 2025, they're going to shift a lot of that gain over into retained earnings, and it might not result in the big corporate alternative minimum tax a lot of people were worried about. But I think what it is going to do is it's going to start showing the market the value in the types of returns that an asset like Bitcoin provides. Right now, they don't see it, because right now it just trickles to the bottom line as these losses. You can never realize a gain without fair value accounting, so they can only mark down their Bitcoin positions.
Yeah.
But when other companies see that now this asset can contribute to the bottom line, that's a powerful shift in understanding. So I think the market's going to take some time to digest that when they see a massive earnings per share number come out, which is a traditional metric that they know and understand. And if you see a $50 per share earnings come out from a company like MicroStrategy, it's definitely going to pique some interest from a lot of other companies.
So what is obviously, with the option, to me, I mistook the ETFs as competition for MSTR in January. However, it seems to me that the options on the ETFs may be more apt to be described as a competitor to the MSTR trade than the ETFs themselves. How do you think, innovations like options on IBIT, for example, are gonna impact MSTR?
I find the ETFs to actually be very complementary products to a MicroStrategy. And the reason I say that is because a lot of the companies that I think are going to show up to the ETFs to deploy capital there are companies that are not looking for the products MicroStrategy is offering. To me, that's the major onboarding for traditional finance, right? And by traditional finance, I just mean all the companies that have operating companies that have treasuries. This gives them the ability to get exposure to that asset through a very safe product that they can understand from an issuer like a BlackRock or a Fidelity or a Bitwise, where they can use their existing brokerage accounts and gain exposure and then hedge that exposure. And I think that that's the most powerful part of the options market for the ETFs. But even those options, I don't think are going to be as volatile as MicroStrategy is. So it very much depends on that volatility profile that the capital's looking for, right? The ones that need the wild swings to beat out their competition and provide better returns for their investors, they'll gravitate towards a MicroStrategy. But the people that might not have that type of a risk profile, but do understand Bitcoin as an asset, I think you'll find them in the ETF options.
Perfect. And what's your thoughts on the leveraged ETFs on top of MSTR? Just quickly, a lot of people ask me that. I don't like them. I don't own them. What do you think of those?
Yeah, I think it's you got to be careful how you're using them. I hear too many people saying that they're buying them and they want to hold them for the next year. Yeah, that's a bad idea, right? For a lot of reasons. But the big one is you get the volatility decay in those. So they're beautiful if you catch it in an uptrend, right? I view them as trading instruments for sophisticated traders. Because if you catch an uptrend, it's great. You get huge outsized returns. But if we do start experiencing 35 or 40% drawdowns in Bitcoin throughout this process, which would be very typical in a bull market, that means that that leverage is going to cut the other direction. Right. And you can go from, being on cloud nine and up hundreds of percent to being back below where you started in a matter of weeks, right? With how fast those can move. And they keep ramping up the leverage there. So I look at it and I kind of go, MicroStrategy's trading at a huge leverage position itself. How much leverage do you need, right? Bitcoin used to be the leverage, the wildly volatile asset with huge upside. Now that's not enough and people want 2 times the already leveraged product. I just think it's something people have to be really careful about really diving into. I tend to stay away from it. I might do a small opportunistic thing, but that's about it. I'm not holding on to those long.
Yeah, people really got to study the Nightingale effect before they get into these leveraged ETF products. So should MSTR be traded in and out, or should it just be bought and held in a portfolio for 20 years?
For most people, I think this is a buy and hold, right? I think trading requires a level of sophistication and analysis that I think a lot of us are at a disadvantage for when you realize that there's these massive firms on Wall Street with these huge analytics pools that have deep vision into the order books, right? There's no edge that I have as a retail investor from my house to trade against those firms. They have more data than I do. So I can do things like a swing trade, right? A longer time frame type of a trade. I can play what I understand about the volatility of MicroStrategy. But for the common person that believes in the trajectory of Bitcoin itself, I think MicroStrategy is one of those that you buy and you just turn off your computer and you check back in a couple of years, because if Bitcoin's going to evolve the way we think it do, MicroStrategy is going to be just fine.
Yeah. So, and finally, we haven't even talked on the main thing that everyone was going on about, because this, to me, what we've discussed is the real story of the financial instrument that MicroStrategy is becoming. The way I like to put it is it's becoming a platform of speculation on the underlying asset of Bitcoin, right? And we haven't even touched on how S&P inclusion, how NASDAQ inclusion is going to impact this. So give us some of the timeline of what's coming up, and how are these index inclusions going to impact what they can do, and how it's going to impact valuation.
Sure. So the two that are happening the most quickly here is going to be the MSCI World Index has a rebalance that's coming up. And that comes up on November 26th is when that rebalance will happen, which is conveniently just 3 days before the snapshot will be taken for NASDAQ 100 inclusion. And the benefit to that is that MicroStrategy at current levels has about doubled in market cap from the last rebalance that they did. And how these funds work is your market cap is weighted against the total market cap of all the companies that are included in that index. And so the bigger your market cap gets, the more of that capital starts to get allocated to your stock. So the rebalance from like an MSCI World will result in passive money coming into the MicroStrategy equity, right? And it doesn't care about price. That's a very important component to that. The NASDAQ 100, the way they do it is they take a snapshot on November 29. So whatever MicroStrategy's market cap is on November 29 is going to determine their placement within that index if they get in, right? Obviously, none of us know for sure, but I've been trying to track it as closely as I can using all the criteria that NASDAQ says that they say. Right now, I show them being right around the 75th place in the index. And so that comes with about $530 million of passive inflows that would come in by December 20th. So they'll
And that's
announce.
obviously on a yearly basis, right?
So that's a one-time capital in the door when they first get included in there, and then they do quarterly rebalances.
Okay.
So if MicroStrategy grows through 2025 in a bull market, they'll continue to capture more and more capital from all the funds that are aligned to that NASDAQ 100 index. And then the S&P 500 is kind of the biggest one. And that's the one that people have the most questions about. I don't have a lot of heartburn around the NASDAQ inclusion. I think that they meet those criteria pretty well. The S&P, they've got a little bit more wiggle room in how they're evaluating these companies, right? They look at the underlying operating company itself. You have to have a cumulative 4 prior quarters of profitability, which FASB should take care of, but we're yet to see how they're going to treat that. So S&P, I don't view it yet as a slam dunk for them, despite it looking like they're going to meet all the criteria for it. That one I'm a little hesitant on, at least for the first chance that they'll have for inclusion. I could see it coming in future inclusions, but I'm still hopeful that we see that next summer. But I'm just not, I don't want everyone to go off and think that that's a sure thing here yet. But I think in the short term, the one that really starts to kick this off is the NASDAQ 100, because that's the QQQ. There's a lot of capital that is tied into that as well. So that's the big one coming up.
So if we look at it, if we summarize it, like all of the capital that MicroStrategy could attract as the product it's becoming, you're looking at index inclusion, you're looking at ATM sales, you're looking at the convertible bond market, and on top of all of that is like retail that's putting money into it as we go along.
Exactly.
Wow, that's a ton of capital. My purpose of having this conversation was to show people that the product of MicroStrategy is not a Bitcoin ETF, right?
Correct.
And that's the thing that I think most people really need to get their head around. Is there anything that you think I have not asked you that I should have asked you that is very important to get out to people so that they understand what this is as a product?
No, I think this has been a really good conversation. The last thing that I would leave them with as it pertains to those indexes and why it's important is you just have to look at retirement accounts, 401ks, IRAs, how people traditionally allocate their money. And when people are getting their paychecks and it's going in there, it's getting automatically allocated into these funds, which grows the size of that fund. And that growing pool of capital means more capital coming to MicroStrategy that doesn't care about price, right? The more catalysts we have around that, the bigger that impact gets. And so I think people, when they think about that, that's what they need to understand. But I think you nailed it. This is an evolution of how you need to think about this type of a company. They're changing their product. They're changing the way they deliver and message out to the market. And they're changing who they're talking to. And that's very important because people have underestimated the levels of capital that are looking for the type of volatility a MicroStrategy can provide them. It's a very unique product.
Yeah, listen, look, thank you for taking the time to do this. I really resonated with your analysis when I found it. I think it was along the lines of, we've been thinking very similarly. Obviously, we have different ways of communicating it, and that's why I thought it was important to have this conversation to show people, the difference of what's evolving here. Remind people how to follow you again so they can keep in touch with your analysis, and let's try and do this again.
Absolutely. Yep. You can come find me on X at Ben Werkman. That's WERKMAN. And you'll see me on a lot of recurring spaces, and we do some live streams every Wednesday where we talk about MicroStrategy. So it's a fun time to be in it, and I appreciate you having me on for this conversation.
No, it's my pleasure. Thanks, Ben. All right. So as you can see, this conversation was a pretty well-rounded conversation, and my intention here is to basically answer every question that I and you would have as normal retail investors, and really understanding everything that we went over again in this conversation is the thing that made me realize that between January 11th and maybe a month and a half, 2 months ago, I had sort of misunderstood the value proposition of MSTR in the marketplace, and it is completely different to what I thought it was. MSTR is not a Bitcoin ETF. It is a volatility product. being sold to a market that absolutely needs volatility and is hungry for volatility. So that is the perspective that MSTR should be looked at. It is a completely different mindset shift of what you are buying. If you will continue to think about MSTR as a de facto Bitcoin ETF, you are going to screw this up, because it is not a de facto Bitcoin ETF. It is a completely different product that has been financially engineered to serve a market where there is capital looking for places to be. And then the underlying, you can basically buy Bitcoin, right? So I hope this clarifies, whatever you needed to get clarified on MSTR. Any other questions, put them in the comments. I had a great conversation with Ben. I think our energy works really well together, and maybe I'll have him on again as MSTR developments continue to happen. Definitely follow Ben. His analysis, his extended analysis, is very, very in detail. It's Wall Street level analysis. So follow him on Twitter, and subscribe to the channel. And of course, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.